Hello, my dear friends. Hey, welcome. How is everyone doing today, guys? My name is Thomas, and I would like to welcome every one of you in this wonderful webinar, this wonderful event. Like I said, my name is Thomas, and for the next 40 to 45 minutes, I will be there with you. We will trade. We'll open some trades together. What else is included in this package? And yeah, guys, today we started 1 hour later than normally. That was due to the fact that the skill timber tournament was over, so it ended today with a nice little prize draw. I didn't watch it closely. I know that we had 20 20 mastery boxes that were given out to some winners who got chosen by a randomizer, and I know that also we gave out or given out or will eventually give out the main money prizes soon. So guys, if you have some feedback regarding this wonderful event, I would be very happy to hear from you. And if you like or if you want to have more tournament like this, or maybe you have some other ideas, yeah, that I would really appreciate this. So we can share these ideas, and hopefully we will be able to bring some of them to life. So, guys, welcome. Feel free to ask your questions. The strategy of the day is going to be Kind Martin strategy, which is in fact one of our oldest, and I wouldn't say like time proven, but yeah, it's just one of the oldest strategies that we have here with at Olymp Trade. Even though this strategy, I think it has existed, it has been there for probably decades, because I mean it is just so I don't want to use the word basic because it has this like maybe kind of like negative connotation, but anyways, this strategy has been there for ages. It is based on the on two indicators. So let me go ahead and click the technical analysis tab. Then I need to click trading strategies, and yeah, so I have Kind Martin here, and I can also select it from here. So I that was my first thing. I like to make this these dots a little bit kind of like thicker, so I don't want to stress my eyes, and I just like when everything is like really visible on the screen. So first of all, I would like to let you know about some very interesting news, and I probably believe, and well, I wish we just had this kind of means to, I know, broadcast this like crazy trading idea, but I just happened well, basically I was a little bit busy, so I kind of missed on that opportunity. I was commuting at that time when this news got released, so I totally missed this movement, and I benefited a little bit on my other trading account, a little bit here when I shorted this. So what's going on? What is this chart is all about? So this chart is all about so yes, like USD, the US dollar against the Japanese yen. And well, if we open, so first of all, when you trade, you always want to be looking at the higher time frame, and we can see that in terms of yeah, we can use this word market capitalization. So in this term, in this essence, in this sense, so the Japanese economy so far has lost close to, well, 35 to 40% of its value due to the devaluation of the Japanese yen. And last year we were trading at around 110 and maybe even under, and now we are trading at 142, and just this morning we were trading at 145 and even over. So yeah, we went up to this very critical level. So what does normally happen when some country's currency loses its value so fast, and at the same time the central bank of that country has certain means of controlling this inflation or devaluation. Yeah, the more correct term to use would be devaluation of this currency. So yes, they use direct market interventions. So with these direct market interventions, they can just go ahead and start. So in this case, they start selling US dollars, and that is how they do it on the internal market in Japan, and that is how they support the exchange rate of the yen. Now, I can see a very good trading opportunity right now, so I don't want to be opening too. Well, I'll try to control myself and not to open way too many trades today. But this is how the strategy works, right? So now I'm going to explain in detail how this strategy works. So as you can see, we have the parabolic SAR indicator, and we have this well, that's called the MACD indicator, which stands for moving average, convergence, and divergence. So how do these indicators work individually? And then I will explain how to combine them and how to read signals from both of them. So when we look, well, first of all, let us have a look at the parabolic SAR. So the parabolic SAR, so it's these are purple dots under the chart and above the chart, and when they are above the chart, it means that, well, so it means that usually prices or charts go down because it, well, we can just think of this imaginary pressure from above. So this pressure makes charts decrease or decline or go down. Now, the second signal, and let's have a look at the opposite signal or situation here. So when the parabolic SAR dots are under the chart, so under a chart or under this chart, so normally or usually or in more than 50% cases, so we work here with statistics, right? We cannot exclude negative or losing trades from our stats, and I would say it's totally normal to have losing trades and to have winning trades as well, of course, but it is absolutely normal if you have, say, like 55 to 60% winning trades out of 100 trades. That is a very healthy goal in terms of trading, because if we just kind of like stick with some unrealistic goals, like I want 90% of my trades to be closing with profit, that would create a lot of extra pressure. You're just like, that is a burden that you will not be able to carry for a long period of time. So don't let yourself down. Don't get down when you have only, say, 55% winning trades. That is totally fine as long as you have your money management and risk management under control, right? So the next indicator in this strategy is called the MACD indicator, and well, we don't really have time to go into detail about, like the formula behind this indicator and how what is divergence, convergence. That is a topic for a separate webinar, like a full webinar. So in this webinar, I will just briefly mention that yes, we have this area, and whenever this area is under the zero line, so we only have one line here. Very simple, very simple. We only have one line, and when we are under, that means sell. When the area is above the middle line, that is buy signal. So buy and sell, very simple. So buy when we are above, sell when we are under. So yes, that is a little bit different, I would say. Like, that's completely different from the signal of the parabolic SAR. I know that. Just do some practice a little bit, and eventually you will get used to you will get used to this, and you will start to understand how these indicators work. I'm sorry, guys. So what is the signal? So the signal with this strategy comes when um, these two indicators, they provide the same signal. So layer of confirmation number one comes from the parabolic SAR. So that is a down signal. Yes, that is correct. We have a down signal. And what about the MACD? It is also under the middle line, so that is also a down signal. So let us open a trade down. And I don't even have to wait until my current trade ends. I can just kind of like go ahead and open a trade. And I want to show you today maybe a little bit more flexibility with my trades, and that you can really choose different durations. So I usually stick with this default time of 3 minutes in my trades, and that is totally fine. I think that this is the optimal time, or this is the optimal duration for the time frame of 1 minute. Nevertheless, you're totally free to try different different things, right? So let us go ahead and yes, and let's check some other assets. So the same situation here, basic dollar index. I can see that, well, so all this time we could be opening. So I call these like waves. So during this wave, I could have opened like a number of trades in the downwards direction. Yeah, that's how it works. It's very simple. So let me find some fresh signal. And today I want to be a little bit more picky about my trades. Like I don't really want to open too many trades, but this one I like. So yes, so before I opened 2 trades in the down, so 4 trades in total in the downwards direction. So now let's try this strategy with up trades. So we have this very, very, very fresh signal, which is well, basically the 3rd minute, the 3rd candlestick or of this new wave, and I think, or based on the signal from this strategy, from these 2 indicators, so that is a signal for an up trade. So that's why I just opened 2 trades in the upwards direction. So yeah, it is simple as that. So I finally closed my trade on Apple. I closed it at around $150, so I'm pretty happy about that. And my profit was, well, how much was my profit? Something like close to $4,000 from those trades. No, from one trade. Yeah, and I had 2 trades, so basically I profited close to $8,000 from this trade. Yeah, but to be realistic, guys, I don't just have profitable trade, like huge profitable trades. Otherwise, I would be like a billionaire by now. Of course, I also have losing trades, and so yes, not all my trades they end in profits, but some trades, yes, they do end up with like huge profits, and those trades they help me cover up my losing trades, and eventually they provide me with a lot of profit as well. So wow, very nice, very nice. Look at this. So this is called financial interventions in action. All right, so gold. Yes, let's try and open a trade on gold. So this is an up trade, so up signal. The parabolic SAR dots are under the chart, and the MACD area is above the middle line. So yeah, that's an up signal. So let's try another trade, like 5 minutes also. Should have opened it a little quicker, but anyways. And yeah, that is a signal for an uptrade. So guys, if you are not sure about Well, the efficiency of this strategy or any other strategy, what you can do is you can always do this, the so-called paper trading and kind of like back testing. All right. So what you do in this situation, you just kind of like roll the chart backwards a little bit, so back in time, and now you just start thinking, okay, so if I open a trade here, or if I open the trade here, would it close with a profit? Yes or no? And then you just see, yeah, some of them, and then you just do basic calculations. So some of these trades would, of course, close with profit. Some of them would close with a loss. So yeah, wow. Okay. So Munch index. Yeah, I don't want to close this trade preliminary. All right. So this was a false signal. Europe Composite Index. So it just keeps dropping. So Munch still 30 minutes to go. And yeah, so the best trade so far is yeah, my trades on the USD JPY. And Munch is, oh yeah, it's reversed. Okay. So yeah, let's try another trade on Asia Composite Index. So well, basically I have two categories of trades today. Some of them, some of these trades I open on currency pairs, and some of them I opened with different composite indexes. And will be very interesting to compare the efficiency. Right, so I think we have a pretty good potential here with Arabian General Index for down trades, because we have really gone up a lot, and I think we are about to start our descent here. So yeah. And well, yes, let's give it a try here. That's AUDJPY. So another asset with the Japanese yen. So the Japanese yen. So maybe some news have just been released. I don't know. Well, anyways, the signal is there, or the signal was there when I opened the trade. So I don't know. With this volatility, we will see. But the signal was there, and I decided to follow it. So Bitcoin, I watched this crazy video today about some guys, about like probably two traders from China, two guys from China, and at some point of time they were making like plus $100,000 in profits here with this trade, and then I think they like opened it here, and then when the price went up here, they were making like plus $100,000 in unrealized profits. And eventually they just lost all their deposit because they used leverage. And when the price just started dropping, I think you can like even find it online. This video, so it's fascinating. It's fascinating to see how people make a lot of money and how people lose a lot of money quickly. Wow, guys, just a bunch of reversal on these indices. So I want to cancel my trade here. I want to save a little bit of money here because I can see that it's just going upwards, and I still want to keep this trade on the AUD so I don't want to close this trade because I think I still have a lot of time, like 3 minutes. That's more than half of the time. And well, yeah, Arabian General Index, I think we are doing quite fine, and I want to add up on this index, and I want to open a few more trades according to the same signal. So the signal is there. The signal is continuous. So this kind of signal, or this kind of strategies, I would put it like this. This strategy is more like a strategy that provides continuous signals. On the contrary, with our so for example, Friday strategy or Horizon strategy, where we sort of have one signal. You just have one signal, you use it, you take advantage of this signal, and then you just move on to the next signal, you just wait. And here you can open, you could be opening trades according to this current signal, because it is just there. As long as the conditions are there, you can be opening these trades endlessly. So, wow, some of my trades, they just close with profit, some don't. Right, let's give it a try with Asia Composite Index. Now, I like this kind of pattern where we have a pretty sharp dive like this one, and then we have this correction, like this pullback, and eventually the price normally goes down again. So this is very common, very close to what we saw with the Japanese yen today. Where is my yen? So the USD JPY, here it is. And so yeah, we had this sharp dive, and then there was this, like, here a pullback and another pullback, and eventually after these pullbacks the price continues continues dropping. Well, yeah, that's just pretty much how it all works. So Asia Composite Index. All right, we are going to see. So the euro now is trading way under the parity level due to all the problems that are, well, happening in Europe right now, which is probably at the world scale. So the European economy and the European Union, they are experiencing some of the worst times since, well, basically World War II. And no one really knows when everything will return back to at least some sort of normal. Well, yeah, that is why we are observing this. The euro costs less than $1, like already 1%, or 1.5%, yeah, 1.5% under the parity level, which is crazy if you think about it. It's just not long time ago, I remember the euro was always trading at, well, maybe I was like a little younger and stuff, but something like 10 years ago, I always had this picture in my head that €1 equals $1.4. So that was kind of like this stable exchange rate. And then all of a sudden we dropped to 1.10. We bounced back up to the 1.20 level, but eventually we dropped all the way to the parity level, and now we are like trading under the parity level. And well, the most common proverb or saying in Europe now is winter is coming, and it is coming, and no one really knows how the European economy is going to cope with these challenges caused by cold weather. And if the upcoming winter is mild, then everything's going to be fine. But if the winter is going to be turns out severe, then well, no one really knows how it's all going to end in Europe. So unfortunately, my trade here, my first trade on Arabian General Index, closed with a loss. Or sorry, not with a loss, but with a refund. Just 1 point. Oh no, hold on. It didn't close. Yeah, that's correct. Yeah, guys, I have this wonderful feature which I wanted to talk about. So it's called flat market protection, and you can enable it here in the settings in trading. Where it is? So flat market protection. Yes, here it is. So when you click this, when you toggle this mode on, it basically allows you to well, that basically is insurance from those trades that close with one tick or one pip difference. So this last digit, we just call it pip for convenience. Okay, so the methodologies might differ, and in some places, in some literature, in some books, in some places, this is called a tick, or sometimes it's called the pips or a pip. It goes by a number of different names, but the point is that you have this minimal change, like the minimum point after the decimal point. And when this trade closes with one pip difference, it basically ensures your trade. It's like a risk-free trade, but at the same time, you don't make profit if your trade closes with one pip difference, but in your favor. Okay, so it basically protects. It's like, I would say, extended trade refund. So normally we have trades that close with kind of like, yeah, opening price equals to closing price, and that's when that is when our trades are insured. So that is a little some sort of extended insurance, but of course it should work in both ways. It works one pip above and one pip under. All right. So from what I can see is I can definitely tell that this strategy works pretty well, or it worked pretty well. Where did I start trading? I started trading here. So with the currency pairs, I've had much better results than with indices so far. So yeah, basically all my profits came from currency pairs, and all my losses came from indices. So the trades on indices so far. But anyways, they just sometimes behave crazy, these indices. Anyways, let's give it a try, a few more tries. So 3 minutes and 5 minute trades in the downwards direction. And I'll keep searching for new signals here. Now, what's going on? Yes, this was a news release on the British exchange rate. And well, everyone was expecting that it will be raised by 50 basis points, and it really did. It did go up to 2.25%. And well, yeah, but that came along the expectations. So The market didn't react crazily to it, but still there was this pretty sharp reaction, but it was still 0.5% or so. Arabian General Index. All right. So these indices are just not as predictable, it seems, during this hour. So anyways, this might be my next trade, the Euro USD. What setting can be used in MACD for 1 minute time frame? Well, I would say just pretty much the same I have. I do have 7, 14, and 5 like this, but when it comes to 1 minute trades, everything, so the technical analysis, so the concept of technical analysis was originally designed and developed for long-term trades, so trades that would go on for days, weeks, and maybe years. So when we in our trading life, when we start applying this to our short-term trades, like 3-minute trades, and 1-minute trades, it doesn't, of course, work as accurately as it would if we were to open mid-term trades. So a simple example would be this. So let me go ahead and open. So for example, Bitcoin. All right. So let's apply this strategy to Bitcoin to higher time frame. So for example, 7 days time frame. And as you can see, it basically tells us. So this strategy basically told us right at this price, like 9,000. So open up trades. So Bitcoin is about to go up in price. There was this maybe double top formation, and that would be just one losing signal. But just look at it. It's just beautiful, I think. It basically, so this, all the movements of Bitcoin were basically predicted by this strategy. And so yeah, technical analysis works great on higher time frames. It also does work with 1 minute time frame, because otherwise I wouldn't be trading it, or I wouldn't be using these strategies. And of course, other traders can prove me correct that it does work on 1 minute time frame or 5 minute time frame, but of course it doesn't work as efficient. And that's pretty much the overall topic of efficiency and money management, and also your preferable mode of trading. So I still believe that, and well, I can prove this by numbers, that Forex is much more profitable than the FTT mode of trading. Still, FTT mode of trading is fine. You can make money trading FTT, but I would say 90% of my profits comes from the Forex mode of trading. Not trying to persuade anyone, not trying to sell you this concept of Forex trading, guys, but it really does work like that. So what I also like about Forex is that you just feel pretty relaxed with this. So you don't really have to watch charts all the time. You just open one trade and so buy and hold, or buy and hodl, as people say in cryptocurrencies. So well, guys, these are going to be my final trades for this webinar. I will not open any more trades. I would say that some of them, they go as planned, and some of my trades on indices especially, they don't go just as well. So anyways, my goal was to demonstrate this strategy to you, to explain how it all works, and so what else I want to remind you? I want to remind you that we have this nice little things here in our market. So you can go here and you can actually buy some risk-free trades. Yes, now you can even buy them. The exchange rate, so sometimes the price of them goes up, sometimes the price goes down, but anyways, it's always around something like half of the price. So sometimes if you want to ensure, if you want more security in your trades, yes, you need to pay for these risk-free trades, but eventually if you do the maths, well, that also depends on your like profitability rate, your depends on many factors, but for some traders it works well, works just fantastic. So you can buy some well, I think we only have like, yeah, not available here, some astrology based instruments. I think we only now have like moon phases indicator, which is also there at TradingView. So we have signals. So trading signals can also be purchased in our platform, and trading signals can also make your trading more profitable. My only suggestion here would be to pay more attention to intraday and swing signals, and with swing signals you can even like absolutely, so what's the most common question? So how efficient these signals are. So let's say there was this signal appeared at 12:05. That was here, and that was a down signal. And yeah, this signal was profitable, I think. Yeah, 12:05 here somewhere. Oh, hold on, it was here, and it closed here. So yeah, definitely it was a profitable signal. So 1 day up. Okay, so at 8:05 this signal was released, 4-hour down signal, 8:05 my local time, and I can say that this signal, yeah, that was a losing signal, that was a negative signal. So you can look at the time when these signals get released, and you can notice that they get released every 4 hours or every sometimes 2 hours. Just at the 5th minute of each hour. That's how this signaling algorithm works. I have nothing to do with it. I don't know how it all works. I just know that you can get signals from it. Now, guys, let's have a look at my trade. So eventually, closer to the end of the webinar, towards the end of the webinar, the final part, I had a winning streak, and I had this. So basically, I lost most of my profits here with this a little bit of unlucky sequence, and I had like 1, 2, 3, like 4 losing trades with Arabian General Index, but before I had 2 winning trades. So I would say that I had more profits from currencies and more losses from indices today. So everyone has their own experience with trading strategies, and with different indicators or even without indicators. So it is up to everyone how to select, how to pick a trading strategy, and how to apply it in your trading. So what is the best pair for 15 minutes trading? You need to test it yourself. It just doesn't work like that. I think everything depends on your trading strategy, because you cannot just simply take one, for example, trading strategy or one instrument or one asset and then say something like, yes, this is the best signal, because markets, they are like constantly changing, they flowing from one state to another. Today might be like, yeah, for example, the pound, the Japanese yen, it's very predictable today, or it's been very predictable today because of this intervention that basically added, that was like this fuel, that was this engine fuel, and that fueled these moves on the Japanese on the USD JPY chart. So and like I said, some of these patterns are super predictable, super easy to read. It's like reading this trading game. So when you start with 1 day or 1 week, when you analyze higher time frame, what is the lowest time frame you drop to it? Well, eventually you start with 7 days, of course. Like you want to be starting with, yeah, probably just knowing the general picture. But of course, you don't go to 7 days, because when you trade a lot, when you trade every day, you kind of you kind of remember all these like current levels of your most favorite assets, and you don't really have to go to 7-day time frame all the time. And then yeah, I start with 7 days, and then I go to 1 day, 4 hours, etc. So everyone has their own, and then eventually, of course, I go down to 1 minute. I think 1 minute. I think that is the minimum time. So, dear traders, thank you very much for watching the video today, my webinar today. I wish you all good luck in trading, and I wish good profits to you. So love trading, enjoy trading, learn different trading strategies, and I will see you next week.